Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today's Wednesday. It's June 8th. The market's going to open up in about an hour and 38 minutes or so, give or take. And as you can see here, we're down again for the count, but I'm not upset about this. First of all, the market was down almost double this last night and overnight, so it actually is coming up. But I actually like when markets open lower and head higher during the day. That to me is a very, very bullish move, and we've been seeing that a lot lately. So I'm hoping we will see that today as well. Now, yesterday we've had international trades in goods and services, and the deficit was actually lower than expected. It was 87.1 billion. They were expecting 92 billion to 89 billion. So this is really positive news. This is less of a number, which is telling us the supply chain and the bottlenecks across the globe are declining, which is a very positive move. Another positive move is the fact that the bond market continues to stay choppy, even though the Fed is going to be making a decision on rates in the next week, right? The next couple of weeks or next week, I believe. And they're talking about raising half a basis point, which is double what it usually raises. So this is the fact that the bond market, the long bond, is not reacting negatively to that and is not dropping is a very, 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 very positive sign. Because look, the long bond is what triggered the major sell-off in the stock market. The bond market started selling off in December, and the QQQ, let me just show you here. Let me go to the QQQ. I could have just used the SPY, but I'll just use the QQQ because their correlation is just so crazy high. So you could see here, it started selling off 1122. The SPY started selling off, let's see here, 104. So the NASDAQ was actually quicker, but the TLT started selling off in December, beginning of December. So about a month before the S&P. So remember, lower bonds, higher yield. And interest yield on the bond market hasn't been moving as high as some economists has been expecting, and we've been moving choppy now for 2 months. That is a good sign. Now, yes, I do believe we're going to break lower and go lower, but the slower that happens, remember, we're in a fight right now between going into a recession and a healthy market, The more this stays choppy, the more time this gives the stock market time to recover. And the more it gives the stock market time to recover, the less chance we'll go into a recession. So the longer this stays choppier and sideways, the better it is for the market because it buys us time. Does that sort of make sense what I'm saying? Basically, interest rates are not going higher if the bond market is moving sideways, or the pressure, the anticipation. Remember, the market works on everything moving forward. So this is a very, very, very stable sign that's telling us that the long bond is saying, even we've had it, that this is too much too fast to the downside, or too much to the upside in terms of raising interest rates, and we just kind of want to wait and see what happens. So if the Fed next week says, you know what, we're just going to go down up a quarter of a basis point, this thing, it's already pricing in half a basis point at the current level. So I know I'm getting a little too excited about this, but this is very, very good. This buys us some time. I hope that makes some sense. Now, in addition to that, we've got the jobless claims, but the biggest report is the CPI. So if the CPI is showing us a little bit of reprieve, that inflation has peaked out, that would be very positive. And again, I'm not looking month over month. I'm looking year over year. I'm hoping that the number will go into the 8, 7.9, 8.1, anything below 8.2, even 8.2 I'll take. But I don't want to see 8.4 because then the Fed will say, hey, we told you so. It's moving up, it's spiking too much. We got to take action. And that could cause the bond market to move down. And I don't want the bond market to move down because that would put more pressure on the stock market. I hope that gives you some analysis. But so far, things are looking good. As I mentioned, bond market is moving sideways. It's not going down. And volatility finally broke down. Remember I told you if we can break down, if this breaks down further, the market will rally. Well, guess what? The market rallied yesterday. Matter of fact, turned around from a fairly nasty day to a reasonably good day. So I want to see this continuing breaking down and moving lower and eventually getting down to the 1920 level. Once it does, we'll remove our short position that we currently have in volatility. It's still down, I think, like 5 or 10%, something like that. We've been holding it for a while. But I'm anticipating that volatility will go lower and the stock market will go higher. Let me show you another piece of the puzzle. Look at the Russell. Now, the Russell has been leading, not lagging the market. And remember here, let me show you a perspective. Look at the NASDAQ. Remember I was showing you this little area right here, how we need to break up higher? And I was showing you the same thing on the Dow Jones. I was showing you thing on the Dow, and I was showing you this on the SPY as well, right? But look at the Russell. Look at the Russell. I know I'm getting so excited about this. It's like watching a child being born, but I love this stuff. I really love this stuff. So look at this. We're breaking higher. We're breaking above this area now. We're already at the 50-day moving average. So if the NASDAQ, the Dow, and the S&P keeps following the Russell, we will see a breakout to the upside. And that will be very beneficial because let me show you something here. If the Dow breaks up to the upside, we're right by the 50-day moving average. If we can go to this area right here, we are home free, folks. We just need to hit the 200-day moving average. So again, I'm hoping that the Russell will continue to lead. I'm hoping that the volatility will continue breaking lower. And I'm hoping that the bond market, there's a lot of hope here. And I'm hoping that the bond market will stay choppy or dare even go higher if the Fed says we're backing away from half a basis point next week. I think it's next week. So again, there's a lot of things to look forward to, and there's a lot of things that are looking really good right now. The bond market, the small caps, volatility, and even the broad market. The international goods and services wasn't too bad. And if we can get a good CPI on Friday, we will have a major, major rally. I can't promise that, but things are looking pretty good in that regard. So let me just organize these things by order. I wanted to get them for you set up before I go into the next segment. So let's talk a little bit about global economy. Hong Kong shares surged 2.2% on heavy buying of shares of Chinese tech stocks after Beijing approved new batch of video games. That's very bullish for the global economy. That was seen as a sign of business outlook for tech companies is improving after a prolonged regulatory crackdown. Where do you think we get most of our tech from? China, right? We know that. And Biden is trying to make nice with them right now by getting rid of those sanctions on tech, which would be really bullish. Tencent, Chinese largest game firm, rose 5.9%, almost 6%, even though it was not directly affected by the government approval. That means this is good. China is shrugging off that shutdown. E-commerce giant Alibaba Group Holdings soared almost 10%, and food delivery concern Meituan advanced 3.5%. Amazing. Now, how long have I been talking about a possibility of a food shortage in the world? I'm telling you, I'm not kidding you. World Bank sharp cut its forecast for economic growth this year, adding to worries as it's pointing to Russia's war against Ukraine and a possibility of a food shortage, something I've been talking about for 3 months now, and a potential return to stagflation. We will see. But again, folks, don't be surprised if you see global food prices continue rising. The economy's fragility has been a top Wall Street mind this year amid worries about interest rate hikes coming from the Federal Reserve. The central bank is moving aggressively to stomp out the worst inflation in decades, but it risks choking off the economy too quickly. It's a balancing act. Here's what I was talking about right here. The Fed is widely expected to raise its key short-term interest rate by 0.5 percentage points at its next meeting next week. That would be the second straight increase of double the usual amount. And again, the bond market is still being choppy. This is really amazing, because if the bond market can stay choppy, that would really relieve a lot of pressure on the stock market. So the next big date is on Friday, when the Fed gives us the CPI. And again, I'm really concerned about the year over year, and I'm hoping, praying, fingers, toes, and everything in my body crossed, that it's going to be 8.2 or lower, because that would give the Fed some signs that things are that the inflationary pressure has peaked out. And remember, markets are always forward-looking, so that would begin pricing things in. Now, today is Wednesday. Wednesday, I give you my top long, top short. I've got a stock that I've never talked about before. This is America Mobile. This is it's an ADR, so it does focus on Latin currency. It's a Latin company that's traded in the U.S. I want to show you the growth rate, earnings growth on this stock, 628%. Dividend, 5-year dividend growth, 37%. The stock earnings per share growth versus previous year, 1,466%. Earnings per share versus previous quarter, 42%. They're obviously doing something right, and their forward PE ratio is only 16. Now, this is a Latin America largest wireless company. They've been expanding rapidly, acquisition to become leading Latin America regional wireless carrier. I don't think I've talked about this stock in a long time, or maybe never. And remember, I'm bullish on communication stocks right now. If you look at the stock, you will see that it recently made a swing high. I think this is an all-time high. Yes, it made a swing high. And the RSI, let me show you the 5-day RSI, which is really good for entries. The 5-day RSI is oversold. It's near 22, and we're below the 50-day moving average, and we turned up higher yesterday. I really, really like this stock quite a bit. I don't know if there's options on it, or if they're liquid, or if I'm just wasting my time. Let's see here. Yeah, there's some liquidity. Let's see, 38 days. There's some liquidity on it. It's not too bad. Yeah, there's some good liquidity on it. So this may be a good trade to put on. I really, really like this stock quite a bit. American Mobile, ticker symbol AMX. AMX, and I would be looking for the August 2021 strike price. But I mean, look at this thing. It's not expensive, and it's a smaller stock. I think the company is, oh no, it's not. It's about 65 million. So it's a medium-sized company. But I do like this company quite a bit. I really do like it quite a bit. I may have to initiate a position in this stock. Now, on the short side, I like Etsy. Why? Look how it's flatlining. And the rally we just had, it barely could do anything. So if the market turns down, Etsy will go with it. So to the long side, we got AMX. And to the short side, we've got Etsy. Now, folks, I've got something really important for you guys. The stock market's downturn started off looking bad for young investors. But after years of damage, it becomes a struggle for everyone. My friend's 401k has fallen 30%, and I'm willing to bet you, or someone you know, is in a similar boat. And what I'm finding with most traders right now is they have zero confidence. They're downright scared to even move a dime. More than anything right now, retail traders need help and education. Folks, I'm coming this Friday to the rescue. I'm doing something that I should have done a long time ago. I'm doing a private workshop that starts at 9 a.m. Eastern Time. It'll go to 1 p.m. Eastern Time. I'll take an hour break. It'll be 4 hours of meat and potatoes, all meat and potatoes. And I'm going to talk everyone about how to trade the current market, to the short side, to the long side, how to protect yourself, how to profit in this economy, how to select the right sector, how to trade in a crappy market. I think I called it plunge protection. Even if you can't attend, which is fine, you're going to have to watch this. It'll be recorded. You're going to have to watch this class at least 3 to 4 times. It's all meat and potatoes. It's not one of those things, so you're going to watch once, turn off. I'm going to talk about a mechanical short-term strategy, a mechanical bear strategy that's worked for the last 20 years, days of weeks to sell stocks, days of week to buy stocks, how to generate a high profit factor in this market. It's going to tell you and teach you how to take advantage of the economy as it stands right now, how to hedge your portfolio, how to trade to the short side, which day of the week you never ever want to sell, which day of the week you never want to buy. I'm going to show you a long system that's in the market 1.47% of the time. 1.47% of the time. Like takes a trade a month and outperforms the S&P by a huge margin. You do not want to miss out. I mean, you do not want to miss out. Technical strategies, algo strategies, everything will be fully disclosed. 4 hours of complete training. I'll give you the stock fetcher code. I'll give you all the rules. Everything will be fully disclosed. No stone will be left unturned. You've got to follow the link below and check this out. I've never done a 5-hour or 4-hour and a 1-hour break class. This is going to be the class. It's going to be my plunge protection bootcamp for what's working right now in this market. Short side, long side, everything. I cannot tell you how excited I am for this class. It's happening Saturday. Follow the link below. Check it out now. You've got to attend. And I've made it so affordable that anyone will be able to make it. This is like something you guys really want to take advantage of. I really, really mean it. I'll see you all on Saturday. Follow the link below. Check it out now. Bye. Have a great, great day. Send me some comments. Send me some love letters. Bye. I'll talk to you guys real, real soon.